Welcome to the Opening Bell Report.
Today we are doing something a little different. Usually when we talk about a stock that's just exploded, and I mean really exploded, we're looking at the usual suspects, AI, semis.
He's a biotech company.
Exactly, a biotech company that just cured something huge. But today, we're looking at rocks.
Rocks sitting at the bottom of the ocean, to be precise.
Exactly. We are breaking down the recent, frankly, massive moves in TMC, the metals company. And I have to start with a number that just jumped off the page when I opened this analysis report. If you've been following the market, you might have missed this one, but TMC stock is up over 400% year over year.
It's the kind of number that makes you, double check your screen, make sure it's not a glitch.
Right. We're talking about a climb from a low of $1.42 to a recent close of $8.32. If you bought this a year ago, you didn't just beat the market, you absolutely crushed it. But here's the tension, and this is why I wanted to dive into this specific report, deep sea dominance. For a long time, the narrative on this company wasn't growth. It was dead in the water.
It absolutely was. It was considered a distressed asset. The sentiment was just incredibly bleak.
So the mission today is forensic. We aren't here to hype a stock that's already run up 400%. That's easy. We need to figure out why it happened. Is this just meme stock mania? Is it speculation? Or has something fundamentally changed?
That's the right question, because the core argument in this report is that TMC has gone through a kind of metamorphosis.
Yeah.
It's shifted from a distressed penny stock into what the analysis calls a strategic geopolitical asset. The rally isn't just hype. It's driven by cash solvency and scarcity.
Okay, cash and scarcity. We're definitely going to get into the cash part because the comparison to their competitors is, well, it's shocking. But first, we have to address what the report calls the elephant in the room.
The valuation paradox.
It is a paradox. I was looking at the financials in the source material, and my brain just sort of short-circuited. TMC is pre-revenue.
Zero sales.
Zero. Not a single dollar coming in. And yet Wall Street is valuing this company at $3.4 billion.
It's a hefty price tag for a company that hasn't sold anything.
It seems totally irrational. Walk me through the logic here. How does the market justify that?
You have to shift your mental model. You can't look at this like a normal company, not yet. With PE ratios and profit margins, TMC is in a sector deep sea mining that doesn't even commercially exist yet.
So the old metrics just don't apply?
They can't. The report uses a phrase I think is perfect here, survival of the fittest. At this stage, the market isn't paying for revenue because there isn't any. It's paying for staying power.
Staying power. Okay, unpack that.
Think about it. A year ago, the stock was at $1.40. Why? Because the market was pricing in a really high chance of bankruptcy.
Right. They thought it might just go to zero.
Exactly. So that 400% jump we've seen, it isn't because they sold some rocks. It's what the report calls a repricing of bankruptcy risk. The market suddenly realized, wait a minute, they're not going to go dust. They might actually make it.
So you're not paying for success yet. You're just paying for the removal of imminent failure.
Precisely. And that brings us to the fundamental reason why they're going to survive when others might not.
Which is where the report's great metaphor comes in. Cash is oxygen.
It's a vivid image, isn't it?
It fits perfectly. You're operating miles under the ocean, you run out of money air, you drown. Simple as that.
And this is where the comparison to the competition really tells the story.
Right, because they aren't the only ones out there.
No, but look at the numbers in the analysis. It highlights their main competitor, Odyssey Marine, ticker OMX.
Okay, let's see them.
TMC, according to the latest filings, has about $116 million in cash on hand.
$116 million, okay. A decent runway.
Now look at Odyssey Marine. They are sitting on just about $5.8 million.
Wow. Wait, just $5.8 million. That's it.
That's it.
That's barely payroll for a company like that.
It's terrifying if you're an investor. Think about it. $116 million versus $6 million. If you're Odyssey, every single day is a crisis. You have to raise money immediately.
And that just means dilution, right? Crushing your shareholders.
It's the death spiral. But TMC, they have a war chest. This cash pile lets them play the regulatory waiting game. They don't have to panic.
They can just wait.
They can wait. And that leads to what the report calls the last vessel narrative. The idea that TMC is the only credible vessel left in this race. Not necessarily because their tech is better, but because they're the only ones with the wallet deep enough to actually wait for the starting gun.
It's like being the only runner at a marathon who brought water.
Exactly. And the market is paying a premium for that scarcity. It's the only real game in town if you want exposure to this space.
So that covers the why from a fundamental view. Cash is oxygen. They have the biggest tank. But the report also dives into the when. And for that, we have to look at the chart.
The technicals.
Yeah. And I know it's tough to visualize on an audio deep dive, but the pattern here is pretty classic. The report calls it a flag and pull.
Right.
So the pull, what is that in terms of human behavior?
The pull is that insane move we already talked about. From $2 up to $10 in a really short time, that vertical line, that's the flag pull. It's a huge surge of buying.
Okay, so the pull is planted, but it didn't stay at 10.
No, and it shouldn't have. That's where the flag comes in. That's the recent period where the stock has just been chopping sideways between about $8 and $9.
Which is super frustrating for investors, right? It feels like the momentum is gone.
It feels that way, but the report argues this choppiness is incredibly healthy. It's actually necessary.
Why? Why not just keep going up?
Well, think about it. You bought it $2, it hits 10, you're up 400%. What do?
I'm selling. I am taking some of that off the table.
Of course. The flag is where those early buyers take profits. But the key is the stock isn't crashing back down. It's holding at 8. That means for every early buyer selling, there's a new buyer stepping in, saying, I think this goes higher.
It's a changing of the guard, building a new floor.
Exactly. It transfers the stock from short-term flippers to longer-term believers. And the report points out we might be exiting that flag right now.
Oh.
There was a recent close at 832 and an after-hours push to 867. It's testing the top of that consolidation range.
And if it breaks through?
Well, this is where the technicals get interesting. The analysis notes that if the stock can hold cleanly above $9, there's very little resistance. It's a vacuum all the way up to the 52-week high.
Which is what?
$11.35.
So a break of 9 could lead to a quick run to over 11.
That's what the chart suggests. It's open water to keep the theme going.
Okay, so fundamentals.check. Technicals.check. It all sounds incredibly bullish, maybe a little too bullish.
Which is why we need to pump the brakes.
Section 4 of the report, the reality check.
Yes. The report is very clear on this. It says point blank, this is not a safe dividend stock.
Do not put your retirement money in this.
Absolutely not. It classifies this as a binary bet.
Binary. It works or it doesn't.
Correct. Survival isn't enough for the next leg up. For the stock to go from 8 to, say, $20, they need permission. You're not investing in a business model. You're investing in a permit.
Okay, so let's play out the two scenarios. The bull case.
The bull case is the International Seabed Authority, the ISA, grants them exploitation permits. The report is targeting mid-2026 for that decision.
About 18 months from now.
Right. If that happens, analysts see a rapid move to $12 plus. The business becomes real. The what-if risk vanishes.
In the nightmare scenario. The bear case.
Regulatory purgatory. The ISA just kicks a can down the road. Maybe it's 2028. Maybe environmental groups block it entirely.
And all that time.
All that time, that oxygen gets used up. That $116 million isn't infinite. They're burning cash every single quarter.
And if the cash runs out before the permit arrives,
then they're in the same desperate spot as their competitors. They have to dilute. And the stock could crash right back down to being a penny stock. It's binary. Win big or bleed out.
It's interesting. The report says the 400% gain we already saw was the easy money.
It sounds crazy, right? How is 400% easy?
Yeah, that's usually the hard part.
But that first gain was just the market flipping a switch from dead to alive, realizing they wouldn't go bankrupt tomorrow. The next leg, getting to $20. That's the hard money.
Because it depends on things outside their control.
Entirely. You're betting on a bureaucracy. You're betting on politics. That's a whole different kind of risk.
It's out of your hands.
Completely.
So let's sum it up. After looking at all this, the valuation, the cash, the chart, the binary risk, what's the final verdict? Is this just the beginning?
The analysis says yes, but with a huge asterisk, a qualified yes. The data suggests the trend is up. TMC has bought itself time, maybe 18 to 24 months of it. That is a luxury no one else in the space has.
They have the runway. Now they just need the clearance to land?
Or to start harvesting.
Right. So for someone listening who's intrigued, what's the actionable number to watch?
The report is very specific. $9.
$9. Why that number?
Because of that flag pattern. $9 is the ceiling. If the price breaks cleanly above it and holds, it confirms the next leg of the rally has likely begun.
And if it fails at 9?
Then you're still in the chop, still in the waiting room. The advice is to set an alert. Don't chase it sideways.
And I think the final piece of advice in the report is maybe the most important for a trade like this.
It is. Keep your stop losses tight.
Protect your downside.
Exactly. This is not a story you can afford to fall in love with. If the permit gets delayed or the chart breaks down, you have to have an exit plan. Because, as the report says, the ocean is deep and full of sharks.
High risk, high reward. A classic speculative play.
It really is. Not for the faint of heart.
Well, there you have it, TMC. Up 400%, sitting on a pile of cash and staring at a $9 breakout level. It is going to be a fascinating 18 months.
It certainly will be.
We want to know what you think. Do you have the stomach for
Don't forget to like, share, and subscribe for more.